Hello again and welcome to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Great to see you all today on Facebook Live. Hope you're all having a great day and thank you for those who listen to me on the iTunes and Stitcher podcast, which is always great to hear from you. So today I want to talk about borrowers and being trapped in overpriced mortgages through no fault of their own, really. We think about the housing crisis as affecting younger people. We always think about younger people can't afford to buy, and younger people can't get on the mortgage ladder, as it were, the housing ladder. And really, that's true. But there is another section of society that are also affected by the housing and lending crisis, I would call it, and that is the older borrowers who are trapped in mortgages, which are poor deals. And they can't afford to move, and at the same time the lender is refusing to give them a better deal if they stay where they are. So the lender is exploiting their vulnerability, in other words. Now, some of this came about through the last banking crisis. So in 2008, when particularly banks like Northern Rock and Bradford and Bingley just went under, the government bailed them out, and they didn't close down and the mortgages were called in. People still had their mortgages, but they were held by a separate company that just really, I suppose, babysitted their mortgages and just collected the interest. Now, this happened to a lot of people on Bradford and Bingley and Mortgage Express loans. But I had one myself, and when Mortgage Express, who were part of the Bradford and Bingley, ceased trading, I was just told, well, your mortgage will just stay, we can't change it, when you redeem, that's it. And they even gave me an option to redeem without penalty if I just wanted to go away. So it seems like they didn't want me. And I stayed with them a few years until I sold the property, but it was actually quite a good deal because I think it was just a percentage above the base rate. And so I was paying quite a low rate, but I couldn't get any more money from them, any further advances. I couldn't change the rate or anything. But some people were trapped into fixed rates, sometimes at more than 5%, 6, 7, 8%. I've heard of 10% fixed rates, and they had to stay with those rates. But when the rates come to an end, they were not offered a better deal. They were just put on a standard variable rate. Now, as we know, rates have come down a lot in the last 10 years. So what seemed like a good fixed rate in 2007 and 8, where you might have had a fixed rate of 6, 7%, which would seem quite good, when rates come down and base rates went down to 0.25%, that was quite a high rate. So when normally with a lender, if you were in a fixed rate and it come to the end of that rate, you'd go onto their standard rate, which would usually be a low rate if interest rates are low, or you could fix again or do something else. But increasingly lenders are not quite offering those better deals, and you have to go somewhere else to get a better deal. And meanwhile, they're attracting other people to them for a better deal. So it's a bit funny, but especially those lenders that were not trading anymore, they were just unable to offer any better rates. Now, they could have, of course, said, right, well, base rates are at 0.25%, so how much do we want to make over the base rate? 2%, 3%? So maybe we'll charge people 2 or 3% over the base rate, the government Bank of England base rate. They could have easily just charged that, but no, they were charging 5% and more. One person said he feels he's paid an extra £32,000 on standard variable rate loans since the lender went under. And you could say, well, why don't they just move to another bank? Why don't they just remortgage? Well, this is the problem. They can't, because after the crisis, the government and the Bank of England came down too heavily on lenders and said, well, you've caused the crisis by lending too much money, which was not really the case. Therefore, we want you to cut back on the flexible lending that you've been able to offer. We won't let you offer interest-only mortgages now to residential borrowers, and you have to stress test this so that you can't borrow very much anymore. And also for older borrowers, the loans have to finish by 65 or 70. So this has meant that somebody who's, say, in their 50s or 60s, who's got a mortgage, is virtually trapped in that mortgage. They can't move. No other lender would want them. Because if you had a mortgage, if you moved your mortgage and the lender said, right, you're 60 now, we want this mortgage to end by 65, and you have to pay it off by 65, that would be very expensive in 5 years. So they're kind of trapped, and they just can't move anymore, because the amount they were able to borrow before the banking crisis has been greatly reduced by the banking crisis and the mortgage market review. So thousands of people are trapped. In fact, up to 100,000, 150,000 borrowers have been overcharged for years, unable to switch to a cheaper deal after their mortgages were sold on to to another company, and the mortgage market review trapped them in that deal. The government said it's working on, working to remove these barriers, but I don't know. I just can't see it happening. I just think these people have been really exploited and ripped off by lenders who've just sort of said, well, that's it, and I just think it's wrong. And lenders, as I've found lenders over the years, the whole mortgage market needs looking at, because at the moment lenders are not lending enough to people to be able to buy their first property. Now, they could say, well, they're trapped by the Bank of England, which is partly true. So the Bank of England have been overcautious, and people just can't borrow enough. When I first bought my property, I was able to borrow 2.5 or 3 times my salary, my annual salary, but the rates were 16%. Now think of that now. If the rates were half of that, then in theory I could afford the same mortgage on 6 times my income. So if the rates were a quarter of that, I could afford the same mortgage again on maybe 12 times my income, because the rates would have gone down. Now rates have come down drastically, 16% up there. Now you can borrow at almost 16 times less than when I was paying a mortgage, but the income multiples have stayed roughly the same. In fact, now they're not even giving you 3 times income. They're saying 3 times income less what you might be paying out for your gym membership, or less what you might be paying out on a credit card. So how can people borrow enough? Already properties around the London area are more than 10 times the average salary, So if a lender is lending 3 times, how the hell can anybody buy a property in those areas unless they've got a huge deposit? It doesn't make sense. The government want to cure the housing problem and solve the housing crisis, but they're not going to do it unless lenders come on board and start lending more flexibly. And I just think that lenders, for instance, there's another problem here. Lenders will not lend long term on interest only. So if somebody is in a rented accommodation paying £1,000 a month, they could probably buy that same property if they got a good mortgage deal and they were able to borrow 95% or maybe 100%. They could probably buy that property and pay less on a mortgage than they would be in rent, and they would own that property. But they won't get the mortgage. That's the problem. They will not qualify for the mortgage, even though they can afford the rent. Does that make sense to you? Because it makes sense to me. If someone can afford £1,000 a month rent, and you wanted to offer them a mortgage which costs £500 or £600 a month, especially if it was on interest only, why not give them the mortgage? Because they don't qualify. It just doesn't make sense, and it's all illogical. Lenders need to be more flexible. They need to start lending on some of the properties which are non-standard construction. At the moment, they'll only lend on bricks and tiled roofs, or bricks and slate roofs. That's it. We only lend on this type of property, nothing else. But it's actually cheaper and easier to build property using modular technology now, and it's been used all over the world, but it hasn't caught on here because the lenders won't lend on it. That's one of the big problems here. And also, another gripe of mine is that if you take out a repayment mortgage, you might say, what do I know about it? Well, I've written a book called Yes, Money Can Buy You Happiness. I was an IFA and in the mortgage business and working for insurance companies and banks for 25 years. So I do know a bit about it. Now, I know that the way an average mortgage works, if you take out a repayment mortgage and say, this is the amount, 50,000, and it's going to run over 25 years, that mortgage will gradually go down. The balance of that mortgage will gradually go down in a kind of a curve. If you imagine a curve going down, it doesn't go down straight, it goes down in a curve. This means that in the early years you're hardly paying off any interest. You're just paying back. You're hardly paying back any capital. You're just paying interest on your mortgage in the early years. So if after 5 years you redeem your mortgage, you think, well, I've been paying all this money, but the capital doesn't seem to have gone down. That's because they're charging you all the interest up front. And then you move mortgage, you move to another lender, it all starts again. So you hardly get to pay your capital off until much later on. So you're paying interest again on a larger amount. Similarly, if you remortgage, if a broker says, oh yes, I can get you a better deal somewhere else, we just have to move from Santander to the Halifax and we'll get you a better deal. And then next year they move you back from the Halifax to Santander or RBS to get a better deal in 2 years' time. So, and all this is costing money because the lenders, that's the way the lenders charge on the mortgages. So it's people are in a difficult position. Also, lenders are charging excessive fees on some of these so-called special deals. They give you a fixed rate of 1%, but they charge you a 3% fee or 2% fee, and 6% to get out of the deal further down the road. That is not really 1%, is it? Really, it's more like 1% plus 2% on top. A 1% deal for 3 years. Is it really 1%? It's not. Because of the fees they're charging. So that's the thing about the lenders. They've got it all their own way. It's run by a few big lenders. Now, don't get me wrong. I borrow money. I think it's great to borrow money and use money to buy assets. But when it's your home, it's not really an investment. It's your asset. It's a roof over your head. So if lenders were more flexible, I think that this whole market could move on. Also in America, if you buy a property, and many countries, if you buy a property, you can buy it with the mortgage attached to it, which makes sense because if the mortgage is attached to it and the person selling it just redeems that mortgage, they might redeem the mortgage, the deeds go back to, say, the Santander Bank, so they've got their money back, they've got their charges back to redeem the mortgage and all that sort of thing, redemption charges and fees, deeds, fees, charges, all this rubbish. And then, say the buyer of the house comes into the same bank and borrows again, then they're giving out another lot of money to somebody else after someone else has just redeemed that money and paid the charges and the setup charges and all this sort of thing. It would make more sense if the person could buy the property with the mortgage. Because if you actually look at your mortgage statement, if you read it, you'll see that there is interest payments and capital payments. This is on a repayment mortgage. So you'll see interest and capital. And you see the capital goes down in very small amounts each month and each year. And it's only later on you'll see the capital go down faster. So this is where I think lenders could be more flexible. They could say, okay, let's allow people to sell a property and buy it with the mortgage and transfer the mortgage into their name. Why not? Why not give people interest only where they don't pay back any capital, an interest only mortgage for 40 years? A young couple want to buy a house, they can afford excessive rent, so why can't they afford an interest only mortgage? I mean, an interest only mortgage on say even £500,000, okay, if you borrowed on £500,000 at say 2% interest only, no capital paid, would only cost £10,000 a year. Now, I know there are flats in London for £500,000 where they would easily rent out for £18,000 and £20,000 a year. So wouldn't it make more sense to say, here's £500,000, you pay us £10,000 a year at 2% fixed rate? That would be better for everybody, wouldn't it? It'd be better for the young borrowers. They know they could buy that house. They've got 40 years to pay the mortgage off. Yes, it's interest only. Yes, they have to find the capital later on to pay it off. But the lender has still got the security. They've still got the property there. And the property over 10, 20 years is going to go up in value. And eventually that £500,000 is not going to be a huge amount of money. In 30 years' time, £500,000 is going to be equivalent to £100,000. This is because inflation and house price inflation diminishes the value of your loan. It's one of the great secrets of property investing, that you can borrow an amount today that over the years, paying that back later on, you're paying it back less in real terms than you are today. So that's my tip for the lenders. I think the new government has got to look at this. They're looking at the housing crisis, the housing market. There's a lot of interesting stuff coming out. We need to build more houses, but we need to make them more available to people to be able to buy them. And I think also new houses have got to be made larger. They've got to be made with more space, more amenity space, more parking space, wider roads, not these pokey little rabbit hutches that just don't make sense. We're not talking about inner centre properties here, inner city properties. We're talking about properties built in a field in the middle of nowhere, and yet they still cram people into these tiny properties. An interesting fact came out. There's a guy who's written a book about housing, and he said that the amount of living space in an average living room now is less than it was like 100 years ago. It's ridiculous. We're getting smaller and smaller. Now, I know this is a problem in London and big cities, but we're not talking about that. We're talking about housing developments out of town. The whole thing needs looking at, and to get people back into homes. Most people want to own a home. If they don't want to own a home, the government should build more social houses and council houses to allow for those people who will probably never be able to afford to buy a home and just want a long-term security in a house or a flat. So there you go. I wish those people luck suing the Northern Rock and the Bradford and Bingley to try and get a better deal. I mean, one person here was on something like 6 or 7% interest, and the lender just won't do anything about it. And another person said his mortgage was later sold to NRAM, from NRAM to Whistletree, which is owned by the TSB Bank. So TSB, which did offer him a low deal, but it only saved him £40 a month. I just think it's wrong. Just finally on this, the lenders will give you a better deal if you move to them than if you're still with them. They don't look after their own customers, their existing customers. They'll give a much better deal if you move. I had a mortgage once, and the lender was offering a deal to new borrowers, but not to me as an existing borrower. I had to move lender and then 2 years later move back to that lender after, which is ridiculous. It cost me a load of money, it cost me thousands of pounds in fees, and because when you move to a lender now, they always charge a fee. They never used to. And rates, interest rates, standard variable rates. What are standard variable rates? They used to be the same for all the building societies. They're not now. Lenders make it up as they go along. How can you charge a standard variable rate of 5% when the base rates, the money that they can borrow at, the money they can get wholesale money is like less than 1%. It's probably like 0.5% they can get money for. What can they get money for? If you go in and put your money into an account there and they're paying you out 1%, but they're lending it out at 5%, that's a pretty good margin, isn't it? Because when interest rates were high, most mortgages were 1 or 2% above the variable standard variable rate or the government base rates. Now, a lot of mortgages are at 5 and 6% over the variable rate. So the lenders, I think, are making huge and excessive profits. So that's my thing. That's my little rant about lenders. However, I'll still be using lenders because you need money. You need other people's money to buy property. So thanks for listening. Check out my book, Yes, Money Can Buy You Happiness. I go in a lot there about managing your money and making money and being comfortable with money in your head, in your mindset. So have a look at that and check out my podcast on iTunes and Stitcher if you're watching me on Facebook Live. So thanks for tuning in and thanks for listening. And if you want to learn more about property, just drop me a line. Drop me a line at charles@charleskelly.net, and I'll put you onto a great course that you can do with some friends of mine that can teach you how to buy property, how to get in to become a property investor using none of your own money, using other people's money. So that's charles@charleskelly.net or on Facebook Messenger. Thanks for listening. Have a great day and bye for now.